In Wake Up Money this morning, most Americans are pulling out all of the stops to try and stay afloat during this recession. But basing your present investments on past ones may not be the way to go about it. So says Daniel Frishberg. He is the CEO and founder of Biz Radio Network, and he's with us this morning. Thanks for being here.
Thank you.
Now, you're saying that whatever you did in the 90s, you should reverse that now.
That's right.
Why is that?
Well, because we're in the exact opposite kind of a time now. The 80s and 90s were a period where interest rates were falling rapidly, but conditions were improving. We had 20 years from the 60s through the 70s of very bad times, and nobody was investing in the market. The prices of everything were very low, and so it was very easy to make money. We had a recovery for those 20 years. We had political decisions that were made that were all pro-business, lowering taxes, making everything easier to do. We're doing the exact opposite now. And so we have the opposite times, and you need the opposite strategy.
Now, you know, when you want to make an investment, should we be thinking in terms of the U.S. stock market as the best place to put our money right now? Or, as Greg Grugan was saying in his piece, we might want to start thinking Japanese?
Well, you want to think, look, where you want to put money is, first of all, right now, the bond market, which nobody's used to and people don't know anything about it, that's where all the money is being made right now, on loans. As interest rates come down, bond prices go up. The government is pouring money into the bond market now. It's buying treasuries, it's going to be buying more corporate bonds, and as those corporate bonds as people feel a little safer with the economy, those are going to appreciate in price, and you're going to make money on those. But the stock market is probably going to continue to move sideways for years. Remember, it has been moving sideways now for 10 years, Jose.
So should people think in terms of keeping their money in this country, or maybe seeing if there are investments overseas it might be worth a while?
As it sorts out, look, right now nobody's stock market is going up, so nobody's. But there is going to be rapid growth in a lot of parts of the world where they're going to move into the middle class, and that development is going to continue. But we may not have that much improvement here in the United States. Look, we have created a surplus. Most of us have some savings. People have money in 401ks. The rest of the world is going to be developing and joining that middle class that we have already become a member of. And they're going to need capital. And that's where the opportunity is going to be over the next several years. In the United States, you aren't going to be able to buy mutual funds and hold on to them while they appreciate. You're going to have to be able to get in and get out. The big investments are going to be in places where the assets are appreciating, going up.
Real quick answer needed from you. I just lost the question, but it was regarding being smarter. This year.
You're going to have to know more now, because when everything goes up, everybody's a genius. Now, the people who were telling everybody, just buy these things and hold on to them, they're going to be fine because they always appreciate. A lot of those people are driving taxis now. They're not in the business anymore. Difficult times separate the people who know what they're doing from the others, and that's where we are right now. So the audience and everybody else has to know more to make it.
All right, great advice. Thank you so very much, Daniel Frishberg, Business Radio.
Thank you, Jose.